Hi everyone, and welcome to this special Game Republic webinar on VGTR and VGEC practicalities, tax and VAT tips for indie studios, featuring Luke Thomas from Plus Accounting. So this 30-minute webinar will give you tips on video games tax relief, VGTR, and video games export credits, VGEC, to understand the eligibility criteria, application process, and key considerations to ensure you make the most of these valuable incentives. We want to get everybody claiming for these, basically. Also, the webinar will briefly look into tax obligations, reliefs, and schemes available for indie studios, as well as VAT. We'll have a short presentation, and then we'll have time for a Q&A. So if you have any questions at all, please pop them into the Q&A section of Zoom, and we'll answer them at the end. A big thanks again to our official partners for supporting our events program. That's Barclays, Red Kite Games, and Escape Technology. So now I'll hand over to Luke Thomas from Plus Accounting for the presentation. Over to you, Luke.
Thank you, Jamie. Yeah, just a bit more of a detail on myself and my firm. We're Plus Accounting. We're chartered accountants based in Brighton, and we specialise in accounting and tax for the video game sector. And we have done for more than 10 years now. And we currently act for over 200 video game studios all across the UK, from a range of sizes, from sort of one-man bands all the way through to 100+ people studios, international setups as well. And we provide a range of services from bookkeeping, VAT, management accounts, through to accounts, tax planning and audits. So a one-stop shop for all your accounting needs, so to speak. So today, as Jamie said, I'm going to give you an overview of video games tax relief and the new video games expenditure credit, explaining how you can claim, how they compare, and some top tips for making sure you make a successful claim. And then I'm going to follow on with a few tips and VAT tricks that I've picked up over time, which I think will potentially make a significant difference to your business. So moving straight on to video games tax relief. This is a government funding incentive which allows video games businesses to claim up to 20% of their core production expenditure. And this actually came into effect from April 2014, so we've had a good 10 years of it now. But surprisingly, there were still lots of studios out there that have not heard of it and certainly never claimed it. And I even had an inquiry last week, a video games company, quite local to us actually. Their accountants never heard of video games tax relief and doesn't know how to deal with it. And they've been making around 10 games over the last 10 years and not claimed at all. And so there is a lot of money sitting on the table waiting for them to claim. So obviously we'll be getting involved there as soon as we can to make sure that happens. Thinking about who can actually claim video games tax relief, as I said, it's aimed at video games businesses, but it's actually restricted to companies, so limited companies. So it's a corporate tax relief. So that means it's not available to individuals or partnerships. It's not something that you'll get any personal tax relief on, and that's quite important to note. And if you're thinking about making games, is looking at potentially setting up a limited company at the earliest possible stage to make sure you can maximise your relief. And so your company can claim that video games tax relief, firstly if it is a company, and then if it is also certified as a British game, and that will be certified by the British Film Institute, the BFI. And how it works is that you, if you're making a game, you would, and it's a long-term game that may take multiple periods, for example, you would go to the BFI, you would submit an application, and you would apply for an interim certificate initially. And what that allows you to do is claim for video games tax relief at the end of each accounting period. And then once the game is complete, you go back to them and apply for a final certificate. And that will then all be tying up the loose ends of the company and being submitted to HMRC to tell them the game's finished. So in terms of that BFI application to make sure that you qualify as culturally British, you have 4 sections of the application, A, B, C, and D, a total of 31 points available across the 4 sections, and you need 16 points to qualify. Sections A and B of the certificate, you can usually pick up quite a few points in there, and that's a lot to do with what the game is about, and what's involved, and where it's set, and so on. And section C is about where the money is being spent on the game, and section D is about who the people making the game are, and where they are living, where they reside. And what I would always suggest is, when you're doing your application, is really consider where you're applying points. You don't have to go for absolutely everything. You've got to just get to 16 points. So try and make sure that you're focused on getting to those 16 points, rather than trying to apply for absolutely every section and struggling, you know, to understand or put in the right detail and narrative that you need to for that. And one really important point is that comes up is that if you do need to claim additional points in sections C and D because you haven't got enough in sections A and B, is that you, when you go to your final certificate application, you have to accompany the application with an accountant's report, which needs to be completed by an auditor, an audit qualified person, which we can do. But when you are looking at that, and the auditor is looking at that, section C is quite detailed, and it requires the auditor to actually look at all of your expenditure, where it was, and make sure it's been actually paid and processed properly, payroll reports and so on. So it can be quite time consuming and therefore a little bit more expensive in terms of paying the auditor to do that work. Section D is about verifying where those people are. So if you said you're the director, the lead of audio, the lead of art is UK based, and you provide a passport, that's pretty simple to sort of verify and doesn't take much time, quite cost effective, and you can pick up quite a few points in section D just by providing supporting evidence such as that. So if you're going to do something and you need to go to section D first, and a worst case scenario, then go to section C. So try and reduce the costs of actually getting yourself through that BFI application as much as you can. The next part, as well as being certified that the game is British, it has to be intended for general supply to the public. And you must also be responsible for designing, producing and testing the video game, actively engaged in planning and decision making, and directly negotiate and pay for goods and services. And one key point is that at least 25% of the core development expenditure on goods and services for the game have to have been spent within the UK and European Economic Area, the EEA. Okay, so thinking about what expenditure qualifies, HMRC identify 4 parts of video game production. They have the initial concept stage, which is where you come up with the ideas for the game and the viability. You then move into pre-production or design, as some will define it, then production and post-production and testing stages. So the core costs that are allowable for video games tax relief are those that are on sections from pre-production, production and the post-production. So that initial concept stage where you're coming up with ideas, that none of your costs, maybe salaries and so on, coming up with ideas and things, qualify for the relief there. So you need to be able to identify at what point you came up with the initial concept and then moved into pre-production, because you could be challenged on the date that you apply. So it's important to be able to have some good information on that to support that. And one thing to note is, I mentioned earlier on about getting your company set up early and making sure you can maximise the relief and so on. Also, if your game started and moved into pre-production before you started the limited company, so it might be, for example, that you come up with an idea, actually you're starting to get some really good sort of feedback and things like that, and you think, actually, I should set up a limited company because I think this would be great and I can get video games tax relief and so on. If you start it too late and it can be demonstrated that you did, or you were already in production or pre-production, then the whole of the game will be ineligible for video games tax relief, just because you may have missed it by a couple of months or a day, even a day technically. But so you need to make sure that you've got your company in place early on to make sure that you maximise the chance of getting relief on the whole game, because obviously that can be a very expensive mistake. And I've seen it happen, sadly, on a few occasions. In terms of the actual expenditure that qualifies as core expenditure and for the relief, It will be the usual sort of expenditure that you would recognise in the profit and loss account. So the salaries, including the employer's national insurance and the employer's pension contributions, subcontractor costs, subject to a £1 million cap per game on subcontractor costs. And you can also claim a proportion of overheads. So let's say, for example, that you're doing a game and you're working on a particular game, but you also, in order to fund that game, you're doing contract work or work for hire, so to speak. So you've got two different activities going on during the year, and it might just be yourself that's involved, and you may be paying yourself a £20,000 salary, but you spend 50% of your time on the contract work and 50% on the game. You would then split your costs between the two, and then you could also perhaps use that as the apportionment of overheads as well. So travel, rent, etc., they can all be split between the game and that, and then the relief can be actually claimed on that fair proportion of overheads. Specifically excluded costs are marketing and PR costs. And they're not actually seen as a development cost of the game, more to do with the sales side of things. And also costs with actually making VGTR claims. So if you were to pay a specialist or an accountant to do the claim on your behalf, then those particular costs wouldn't be allowed. And there's also a restriction on loan interest as well, funding the game development. And something that I'll look at a little bit further down the line to explain a bit more is to do with dividends. Now, this is a common sort of confusion, and a lot of businesses excuse me, are set up where the owner may pay themselves a small salary and dividends to top up their income. The salary qualifies as it's an expense of the business, but the dividends don't. So you wouldn't get relief for that. But obviously, that can come into effect in terms of planning and how much you actually remunerate yourself. And it can be different from a normal business in that sense, that you might actually think about increasing the amount you pay yourself. One thing that does qualify and can make a difference is pension contributions. And I have seen where directors will pay themselves up, maybe not quite as much, but maybe up to the £60,000 allowance for the particular accounting period and year as an employer pension contribution, still having the low salary and dividend to top up their personal income, but enabling the remuneration package to be the pension plus the salary and that can also be contribute towards the core expenditure for the game. So there are things you can do there which don't necessarily have to impact on your personal income. And one of the other key parts for VGTR is that the costs that are allowable for relief are those which are incurred within the European Economic Area. And this is one of the big differences between that and the new relief, which we'll come to. And therefore, it's really important to make sure you keep a record of where your actual money is being spent, because of when it comes to doing a claim, there needs to be clear identification between non-EEA spend. So that might be you've got a contractor in America, for example, and that cost won't be allowed, and EEA expenditure. Now, all of those expenses that you incur still go towards working out whether the game has made a profit or a loss, but it's not necessarily going to mean that they're allowable in terms of the additional deduction that you get. And I'll explain now how the sort of claim will work and what you can actually get. So you claim an additional deduction to reduce your profits or increase a loss. This will reduce the amount of corporation tax you potentially need to pay. And if you make a loss, you can potentially surrender that loss for a 25% tax credit. And that's actually repayable to the company in cash, which is often a misconception. You do actually get money back from HMRC. Essentially what they're trying to do is give you 20% of your qualifying costs back to you, and the calculation of 80% of those costs divided by the 25% is 20%. So the additional deduction you get will be either the lower of 80% of total core expenditure, or the amount of core expenditure on goods and services that are provided from the UK or EEA. So depending on the level of profit, and this is where I came to about the up to 20%, depending on the level of profit or loss, the rate of relief might be lower than 20%. So if you take an example of a company that has made a game and at the end of the accounting period, you've done your accounts, you've made a profit of 50,000, Now, as it stands, pre-election, pre-everything, the tax rate on that would be 19%. So if you then said out of that profit, in the profit and loss that reached that 50,000, so it could be, for argument's sake, you had £100,000 of income, £50,000 was spent on the game, and so you've made a £50,000 profit. Out of that 50,000, £10,000 qualified as the core expenditure on the game. £10,000, 80% of that is £8,000. So you reduce your tax and your 50,000 taxable profits by £8,000. So instead of paying tax on 50,000, you're paying tax on 42,000. At a savings of 19%, you save yourself £1,520. So that's an actual relief of 15.2%. So under VGTR, if you're a profit-making business, you might only actually be saving 15% and getting 15% relief versus the big headline of 20% that you're getting back. So that's all to do with the headline corporation tax rates differing from the main sort of relief that you're getting. If you're a loss-making business, broken even or made a loss, so maybe you've just spent the whole year making this game and you've not had any income, you might have had some loans put in and so on to help it. You've made a loss, then that you've spent £10,000, for example, on a game over the course of the year, you can claim back £2,000, so 20% back, because you will have £8,000 additional deduction, which is surrendered for a 25% tax credit, £2,000. So therefore, loss-making business gets the full 20%, profit-making gets 15%. So not quite as good if you're profit-making, but when you're talking quite big numbers, it's probably nothing to sort of put you off of claiming, that's for sure. So with video games expenditure credit, the new relief coming in, this is actually going to replace eventually VGTR completely. Early adopters can actually take it up from the 1st of January this year and apply it for any game that they're working on with effect for costs incurred after 1st of January. But for all new games starting after April 2025, you will have to apply the new video games expenditure credit. But if you started the game before April 25, you can continue to use video games tax relief until March 2027, at which point you then will have to move over to the new relief. So I've been desperate to get some more detailed information on the video games expenditure credit, and I've been hounding the HMRC Creative Industries team for details on when they're going to publish their sort of guide on their manual on video games expenditure credit. And Stephanie Martinez, the policy and technical advisor there, last week emailed me to say it's almost ready, but they're not allowed to release anything whilst there's an election ongoing. So we're going to have to wait until at least July before we hear any more information on that. So apologies, I can't be any more detailed on that, but something for me to look forward to after the election, if not the election itself. VGEC is very similar to video games tax relief, but there are some key differences. Firstly is in that eligibility criteria. As I mentioned earlier on, for VGTR, you have to have at least 25% of your spend in the European Economic Area as one of your main reasons to be eligible. For VGEC, it's 10% of core costs. However, that only is for activities in the UK, because of under VGEC, the qualifying expenditure is only that is used or consumed in the UK. EEA is no longer part of it, and so it's either you spent it in the UK and you qualify, and that will qualify for the relief. Anything outside of that doesn't actually qualify. So it's probably a post-Brexit thing again, but too much politics in this talk. So what you can claim, and it sounds great on paper, is the expenditure credit rate of 34% for VGEC, which is, when you compare that to a 20% rate for VGTR, it sounds great. However, the difference being that the 34% rate is going to be before tax, and you have to deduct corporation tax at 25% on that. So the effective rate is actually 25.5%. So actually a lot closer to the 20% for VGTR. And you have to take into account that you can no longer claim EEA expenditure. So there's going to be a lot of weighing up there in terms of which one's going to be right for you. The qualifying expenditure, very similar to VGTR, but it will be 80% of your total core costs, and the amount or the lower of that and the amount of UK core costs. Again, eligible expenditure, it'll be all pretty much the same, apart from the UK, non-UK spend, and the marketing, etc., is all likely to be the same. We need some further information on that. One thing that it is doing is removing the £1 million cap per game for subcontractor costs, which may, for larger entities, certainly have some positives to that. Given the differences between the two, when deciding whether to go with either VGTR or VGEC, you have to think about three main things, in my opinion: is whether your business is profit or loss making, whether your expenditure is mainly within the UK, or there is a significant amount in the EEA, and your recruitment plans. If you've got a plan for a new game coming up, and you know that you're going to be pushed into VGEC before long, you might well start to be thinking, right, well, do we actually want to recruit UK only people now, because we want to make sure that we can get the maximum relief that we can from this. So there's going to have to be a little bit of thought put behind these as time goes by, for planning and maximising your position. An important point to know about VGTR or VGC is about timing and cash flow. So if you're relying on VGTR or VGC for supporting your business and cash flow and so on, then you're probably going to want to make sure that you are claiming as soon as you're able to do so. And claims, they will usually accompany the submission of your year-end accounts and your company tax return. So the claim, it goes through your return, and so that will be the time to do that. So the British Film Institute, who you get the cultural certification from, they're currently taking around 12 to 16 weeks to process applications for certification. HM Revenue and Customs work towards around a 40-day turnaround time for claims that are submitted. So, and in between that, you have to actually do all the work to actually get your accounts and your claim completed. So there can therefore be quite a considerable amount of time between sort of the application part and actually getting your tax credit and the relief that's due. So I would encourage everyone to sort of organise their BFI applications nice and early if they're keen to get their money in soon, making sure that they've got that and can present it to the accountant at the year end when they're doing the accounts, so that we can get the claims in nice and early and leave it as short a time as possible to get the relief in. There are alternatives to that, and it's not to everyone's taste, but if you've got an appetite for borrowing, there are quite a number of good businesses out there that will loan against video games tax relief, and you can get a large percentage of what's due to you up front, and that can help mitigate sort of the cash flow issues. And you do usually need an accountant sort of supporting evidence to confirm the amount that you're likely to get, but it can be a good way of mitigating the sort of cash flow issues with waiting for delays, because we have seen, on occasion HMRC have got themselves in a right mess and left it 6 months or longer to actually process some claims, and that can put businesses in a lot of difficulties. So it's worth knowing that there are alternative options out there and people to loan against that. A couple of points I just wanted to add on video games tax relief and VGEC that can be useful, and we've seen work in the past. One is it's quite common in the film industry, and it's growing in the video games industry, is use of subcontractors, where you may agree not to pay the subcontractor up front for their work on the game, but agree that they will get a percentage of annual sales revenue as their remuneration from the game. Now, obviously, when you get to the release of the game, that's kind of development complete. So you would normally imagine that there'll be no more costs being incurred, so you can't make a claim. So that is when the game is released. Sales don't come in until after that, and you start paying the subcontractor after the game's finished. Well, you can actually count those future costs as qualifying subcontractor costs up to the cap of £1 million still, but you can still claim video games tax relief after the game's finished for a number of years, obviously subject to the March 27th for VGTR, but and the 1 million cap. But it's an opportunity to maybe, if the budget is tight, to negotiate deals with subcontractors to sort of push forward the expenditure you might have. The risk of doing that is obviously the game is very successful and they become a very expensive subcontractor for their part in the game. So there is a balance to these things, but something to consider from that point of view. And the final point on video games is the potential to set up a special purpose vehicle, a separate company, which may be a subsidiary to your company. And that there can be a number of reasons for doing that. It can be to protect profits, it can be to protect IP, but it can also be to maximise VGTR. So what I said earlier on about the dividends not qualifying for VGTR, what some businesses have been able to do is, with their sort of main company, continue paying themselves the salary, the small salary, and top up their income with dividends. But then they've set up a special purpose vehicle company to create the game and develop the game on their behalf, and they've got the legal documentation in place, they've done all the correct invoicing, and there is a bit of detail and work that goes behind all of that. But essentially what you're then doing is you're charging the company that you've set up a man-month rate, a commercial rate that can be justified, let's for argument's sake say £5,000 a month, so 60,000 for the year. But you may not be paying yourself 60,000, you may be paying yourself 12,000 out of your main company, but it allows you then to claim relief on the 60,000 rather than your £12,000 salary. And I won't go into too much detail on the whole structure of that now, but if anyone does ever want to sort of chat about how that works a bit more, then I'm happy to sort of follow up on that. But it's just putting those into your mind that there are potentially alternative routes to doing that. Just quickly move on to some of the other top tips for studios, tax and VAT. I appreciate I'm sort of running a bit over time here.
We'll allow an extra sort of 5-10 minutes, Luke, because I want to allow time for people to ask questions as well. So
brilliant. Okay. Just so, sort of few main points is firstly on VAT, and there's you may well know that there's a compulsory registration threshold of £90,000. So that is where your sales have exceeded £90,000 over a rolling 12-month period. Now, when you have income that perhaps is from Steam, if you put your game on Steam, it's a US platform. All of that income that you get from Steam is outside the scope of UK VAT and doesn't count towards the £90,000 threshold. So you might bring in £150,000 of sales, and you don't need to register for VAT because of it's outside the scope completely. And so lots of people get confused about whether they're allowed to register for VAT or not allowed to register for VAT. I had one client that came along a few years ago and thought they had a US publisher, thought that because they were US and outside the scope, they thought they weren't allowed to register for VAT. Quite the opposite, and they were turning over, £1 million from what they were getting from the publisher. And I explained to them that they could voluntarily register for VAT because they're a trading UK business, and that meant that they could get all of their VAT back, and it ended up being sort of £40,000 worth of VAT that they could suddenly claim that they weren't budgeting for, which makes a huge difference to people's cash flow. So you can voluntarily register if you want to, and it makes it worthwhile to do so, but you don't have to. So you can avoid a lot of VAT complexities. Steam platforms and alike, they will be responsible for all VAT, whether the sales to UK individuals or all around the world. They will deal with all of that stuff for you. They will just take that 30% commission from you for the pleasure of doing so. The other part too, if I carry on with VAT, is to consider the cash or invoice accounting for VAT. So cash accounting is where you only put on your VAT return money that you've actually received or expenditure that you've actually incurred, which can be advantageous if you're raising invoices of large amounts with VAT on them, but you haven't yet been paid and you get quite slow payers from that point of view. Invoice accounting, on the other hand, if you are getting all of your income from outside of the scope of UK VAT, so there's no VAT due to HMRC, but you're incurring a lot and you've received lots of invoices, means you can claim that VAT back sooner. Even if you haven't paid the invoice, you can get the VAT back on it and delay paying it. So things to think about from that point of view. And then one point that sort of follows on a little bit from the US income and Steam and so on is about withholding tax. Now, if it was Steam that you put your game on and you made, for example, £100,000 of sales, Steam would take £30,000. So in your profit and loss, you would say £100,000 of sales, £30,000 Steam costs, gross profit £70,000. Now, unless you get your paperwork in place with them, and there's a form that's called a W8BENE form, and you get that filled in and submitted, Steam will withhold 30% of it as well. So as a US withholding tax, and pay that over to the IRS in America. So that would mean, in theory, that you'll only get £40,000 in actual cash out of £100,000 sales. What happens then is you work out your UK tax position, and let's, for example, say you've done all your video games tax relief and so on, and you're left with a tax liability of £10,000. You've paid £30,000. You can only get relief for £10,000. The rest of it disappears. So you really need to make sure you get your paperwork in place. So W8BENEs are the American sort of forms that you would fill in to avoid the withholding tax. But for the rest of the world, either countries have their own forms that they want you to fill in, or you can apply for a certificate of UK residence, filling in a simple Res 1 form at HMRC. I'm always happy to help with those if anyone's got any questions on the direction towards where to get those. And a couple of final points. Corporation tax, there's a difference between the deadline for paying your tax and the actual deadline for submitting your tax return. Now, the deadline for paying your tax is 9 months after the year end. The deadline for submitting your tax return is 12 months after the year end. So that means if you're having cash flow difficulties, for example, you could withhold actually submitting your tax return until the last minute, 12 months later. And that means that HMRC won't be pressing you and chasing you for the money that you owe. There will be interest on the delayed 3 months, potentially, but there wouldn't be any penalties as long as you submitted it in 12 months. So there's potential there to use that to your advantage. And then final couple of points, SEIS or EIS, which is the Enterprise Investment Scheme, excuse me, which is encouraging investments and is worth being aware of. And basically what that does is it allows you to raise funds into your business, and the investor can get personal income tax relief on the investment, 30% or 50% depending on which scheme. But basically, if your investor has got a £100,000 personal tax bill, but they put in £100,000 into your business, they can take off £50,000, 50% of their tax bill. So it only costs them half of what they've actually put into your business. So that's under the SEIS, 30% for EIS. And there are lots of things to be aware of that. And if you want to go down that route of potentially raising funds that way, then you can get advanced assurance from HMRC to encourage investors, and so share that with them. And then finally, just a quick one to be aware of is something called an EMI scheme, and that's the Employee Management Incentive Scheme, and that's really popular for rewarding staff and incentivising them and retaining them, and it's a very tax efficient method of offering the option to acquire shares in the company at a future time, and putting in some hurdles and time limits and things to hopefully get your staff growing the business with you and sticking around and wanting the best for the business and benefiting from that in the long term as well. So very useful things to be aware of there. And as I say, absolutely happy to answer questions and follow up anyone that wants to know more on these things. And there you go. Over to you, Jamie.
Fantastic. Thank you, Lou. Well, we'll allow another sort of 10 minutes. I think it'd be useful for people because this is fascinating stuff. And I think that the point you make about SEIS, because I work a lot with investment events, really important that companies get SEIS registered, because you get angels and people that can put money into your company, and without that, you're missing out on some opportunities there, I think. So definitely get SEIS registered. Okay, if you've got any questions, pop them into the Q&A. I've got a few here, so I'm going to kick off with one about video game tax relief or VGEC versus R&D tax credits. So if you've got two projects in your company, can you have VGTR for one and R&D tax credits for the other within the same company? Is that allowed?
Absolutely, yeah. So lots of clients do have this, where they'll be making more than one game, or they will be making a game and they'll also be doing some R&D work. what is required is that you're able to really distinguish between the two and apportion those costs and the people involved or their time between the two different projects that are going on. But there's nothing wrong with having both of those and claim for those. Makes the claims very interesting and fun for us, but it's certainly something that people do. And I've had claims of recently of sort of 10 to 12 games in one accounting period. People making lots of different games, relatively different sizes, but then you happen to apportion lots of different, people's salaries and maybe percentage of times. And it's very important for businesses to be able to actually keep a track of that and make sure that they can actually justify the amount of time being spent between each one and ensure that there's no what's called double dipping, which is where you've taken someone's salary and put it into two different sort of projects and claimed it twice.
Yes, yeah. Anecdotally, I've heard that getting R&D tax credits is much more difficult now than it used to be. Is that the case?
Yeah. They really tightened up on what qualifies, and they're actually sort of going through historic cases quite a lot more now and putting a spotlight on them and actually saying, does this actually meet the criteria we're expecting it to, and opening up cases going back, a number of years, and it's putting a lot of pressure on small businesses in particular because of that money's been spent and reinvested and everything, and then suddenly they're coming back and clawing it back and putting people out of business. Really, there's been some horrible news articles on it about them just coming out of the blue, 2 or 3 having approved it, having received all the project information in the past, and then deciding actually we're going to challenge it now. So be wary of that. And it's not ideal, but it's still a very, very worthwhile relief if you can actually sort of justify the work involved. And unfortunately, it is discouraging people from claiming it, which is the problem, because they're making people so scared of being caught out further down the line. With video games, it's a lot simpler because of it's a game. You can see it's a game. It's not something you've got to try and justify with wishy-washy guidance.
Yeah, no, absolutely. Okay, I'll ask another question. If you have EEA-based devs, obviously you have to use VGTR. How long can you continue to do this? Because obviously we've left the EU, hooray. So how long can people use VGTR until?
Yeah, so the VGTR as it stands, you can use it for any game that starts before April 2025, and you can continue to use it until 31st of March 2027. So all of that time period, any EEA costs, you can continue to do that until you're forced to move over to the VGEC. But that's why it's important to start thinking ahead about where you recruit. I think that's going to be quite key to a lot of people's future planning.
Yeah, absolutely. Okay. For smaller indies, and this is something that I had to consider when setting up Game Republic, is it always worth registering for VAT? I mean, there's also a point where you get to where you have to, but there was a kind of a thing with myself where it kind of felt more legitimate as a company when you're kind of asking people to pay VAT. It's almost like you're sort of a company, if you like. I mean, what do you think about that? And what's the perception of people that aren't VAT registered?
I think people, it varies person to person, really, but I do understand the sort of kudos that comes with being VAT registered. It's like being set up as a limited company because it makes you seem like the real deal and a bigger entity. It's, VAT, what being VAT registered can do is it can, if you're not registered, people either think that you're very small and maybe a risk to work with. You might actually be quite large. Like I said, you could be turning over several 100,000, but not need to register because all your income's outside the scope. But if you are VAT registered, obviously that takes away anyone's sort of ability to really understand that you're under the threshold or not. So you could be turning over 10 million or you could be turning over 50,000, but being VAT registered sort of hides that, but does legitimise your business, like you say. It gives you a sort of I look at a little bit more serious that I am VAT registered. But in terms of whether you voluntarily register from a sort of a cash point of view and a business point of view from that sense, it really comes down to looking at the numbers and saying, if I'm going to engage with an accountant, for example, to do my bookkeeping VAT returns, how much is that going to cost per quarter? How much am I actually going to get back from the VAT man for submitting VAT returns? Is it worthwhile doing it? If it is, then you can do it. If it's, it's got to be significant, isn't it? It's got to be from that point of view. It's got to be, more than it costs you to do it. Otherwise, you just wouldn't bother. And I can understand everyone's approach from that. And I think it's down to individual sort of feelings on the situation.
Okay. Right. I'm aware that we're sort of fast running out of time. I'm just going to put on the slide with all your kind of contact details on there, Luke. But if anybody has any more questions, just pop them into the Q&A. I was going to quickly just pick up on the SPV thing, the special purpose vehicle, because this is something that obviously the film industry is very used to. And I don't think that games companies are. And there's opportunities like, for example, Screen Yorkshire in our region has a content fund that kind of tends to fund through SPVs, but they haven't had many, I don't think if any, uptake from games companies because of the way that they've organized this fund. So can it be worth setting up an SPV just to get access to some of these more kind of funds that are used to kind of funding film and TV?
I think if it's access to funding, then that's obviously down to the particular business and whether or not that they need that funding. The main purpose a lot of the clients that have come to me have done is that it can maximise and ring fence individual projects. So you might have 2 or 3 subsidiary companies each making a different game, and it ring fences the expenditure and the costs. But it also allows you to claim a better rate, essentially, because of what you might have is you have your employees, some of them earning £3,000 a month, £4,000, £5,000 a month, but you might charge them all across in the structure at a commercial man-month rate. So if it was a job for hire, for example, you're working with a third-party company, you wouldn't just charge out at the rate of the pay that you're paying yourself. You include a profit margin of maybe £1,000 or £2,000 in terms of in that sense. So what I get paid per hour isn't the same as what I charge out per hour, because within that there's a cost of all the overheads and everything else built into it, and things to all those costs. So that's exactly what's happening here with the subsidiary, that you're going, well, we're going to charge everyone out at £6,000 a month. It just happens to be that it's a subsidiary company rather than a third party that you're doing the deal with. That subsidiary company will charge you essentially the same amount that you're going to lend your staff to it for. So it could be, for example, in a very simple term, that the subsidiary company will say to you, we will develop the game on your behalf. You're going to have to pay us £1 million to develop it, but we haven't got any staff. So can we borrow your staff? And you say, yeah. It's going to cost you £1 million. So you've then got a break-even situation, but you're now claiming on £1 million worth of costs, rather than looking at your own P&L and only claiming on £600,000 of costs. Okay. So the difference between the two is the uplift in the rate of relief. And the revenue have had a look at this, and the government have issued some more guidelines on it, and making sure that if you do apply these man-month rates across there, it has to be at an arm's length, or you have to be able to justify it as a commercially fair rate to do it. And we have seen a range of rates being applied by lots of different businesses across the industry. It's quite important when you are setting these structures up that you are able to come up with a justifiable rate, and that might mean doing some sort of research within the industry as to what is a fair rate for charging for the particular roles that are being undertaken for these projects. So there is lots of information out there to be able to do that, and it's quite easy. But we've seen some very decent amounts come through, and people have made quite a lot of money from off the back of it, which has helped fund projects and keep them going for longer, and keep people employed, which is the important thing. And allow projects to come to conclusion. So it is a very valuable relief, and we want more people to claim it to make sure that the government see the benefits of it and keep going with it.
Definitely. Whoever's in charge from July the 4th, whatever.
Who knows?
Who knows? Good stuff. Brilliant. Well, thank you very much, Luke. That was all really useful stuff, and we are recording this webinar. So we'll get it out there on YouTube and that as soon as possible, and send you out links and everything. So if there's anything that you missed or you want to go over other bits, you can watch that. You can also contact Luke at Plus Accounting, one of our brilliant members. So and find out more if you want to have a chat about your particular circumstances. Yeah, thank you very much, Luke. Thank you for joining us today.
You're welcome. Thank you. All right.
Good stuff. Thank you. That's it for today's webinar. A big thanks again to Luke. Our next event is our summer arcade party on Wednesday, the 17th of July at Leeds Arcade Club. Always a popular event. I don't know why. 3 floors of arcade games, pizza and drinks. What's not to like? If you are not a Game Public member and you want to find out about how to attend that event, just get in touch with us here at Game Public. We also have just 3 places left for our free, fully funded Game Studio Startup Bootcamp. So a lot of the stuff that we've been talking today about getting your company investor ready and all that kind of stuff, we'll be teaching in these boot camps beginning on the 24th of June. So just 3 places left. So if you want to take part in those startup boot camps, get in touch with us via email or the Game Republic website, and you don't have to be a Game Republic member either to take part in those boot camps. Right, I think that's it for today. So thank you again for watching, and we'll see you again soon. Thanks very much. Cheers. Bye.
Bye.